Okay.
All right. So someone just asked a question on Mako's group. All right. He had a Zoom call some few hours ago, and he was asking as to how you would tell whether another block will hold or not. All right. He made some explanation, but
Yeah, that was Andrew. That was me.
yeah,
That was me.
Okay. Then I'm so glad you are here. All right. So I just wanted to add some few things. All right. So in order to identify as to whether an order block will hold or not, there are few things that you need to look out for. All right. The first thing you have to look out for is as to whether there are buy stops or sell stops resting below or above the order block. All right. Either being a bullish order block or a bearish order block. All right. So let me just do a demonstration here. So this is another block, right? Yeah. So this is another block. So in order to identify as to whether this other block will hold or not, first of all, you need to identify what you call the fair value gap or a liquidity void. All right. And you know we have this is a liquidity void or a fair value gap. And then you should identify sell stops for a bullish order. So let's say if it is a bullish order block, what you need to identify is as to whether there is a sell stop resting above that bullish order block. So as you can see, we have somewhat stops resting below this. So these are stops resting below these ones. So these are stops, all right? So by seeing these signatures, it tells you that this is a high probability order block, that should price gets to this level, you're surely going to see a reaction, either a bounce back to fill this liquidity void, all right? And you can use this, or you should use this as a confluence, all right? You just can't trade what I'm telling you, all right? You always have to use it as a confluence. So depending on how or the direction of the market you are predicting, definitely it will land in another block. So you ask yourself as to whether this other block will be a high probability order block or not. So by seeing these signatures, it should tell you that this order block is a high probability order block, because one thing is we have a fair value gap or a liquidity void resting above the other block, and then we have self stops resting above the other block. So that tells you that this is a very high probability order block, in a way that when price gets to this order block, you should see a reversal, definitely to fill these order liquidity void. So let me just show you another example. Okay, so as you can see, this is another block.
All right, I think the net is working now.
Yeah.
Yeah. No wonder you are not talking very long.
So we are using this as the other block, all right? Because I mean, this is the biggest of the last down close candles before the up movement. So beneath or above this other block, you have what you call the sell stops. So there are sell stops resting below the other block or above the other block, sorry. Then you have a fair value gap. So as you can see, this fair value gap has already been filled. Price just came down here to fill the other block, to fill the fair value gap before it moved up, right? But this other block is still valid because there are still sell stops resting above this other block. So you realize that as soon as price gets to this other block, you are going to see a reaction. All right. And we are seeing another block here. All right. So this is a bearish order block. All right. And below this bearish order block, we have what you call a fair value gap or liquidity void. All right. So this is a liquidity void. All right. So you have one condition met. All right. You have one condition met. You have a liquidity void resting below this other block. So within these two conditions, you have one condition met. So now you'll be waiting for the other condition. That is, you have to see buy stops. All right. So by seeing buy stops, price will engineer liquidity. So you want to see price making something like this. All right. Price trying to get to the other block, but you want to see a reversal before it gets to the what? To this other block here. All right. So by price getting to this other block, sorry. So as I said, you want to see price engineering what? Liquidity. You want to see price engineering liquidity. So by seeing price engineering liquidity, so you see liquidity here, that is a buy stop liquidity here. So by seeing this signature, if you should see a next move, if you should see a next move to the upside, know that price is getting into this other block. And as soon as price gets into this other block, because you have already seen these signatures here, that is the buy stops and then the fair value gap or the liquidity void, is likely that what you see a reversal. All right. But as I told you, you use this as a confluence. All right. As I told you, you have to use this as a confluence. You just can't trade just this idea, because I mean, there are sometimes that it doesn't respect that just because price, in terms of order flow, price will be moving to a particular area. So always you have to use this as a confluence.
So would you then drop down to a lower time frame and look at some other chart patterns or something like a candlestick patterns or something like that, or would you just
Okay,
take the
you might
trade?
want me to move to a lower time frame.
Yeah.
Yeah, I mean it happens. All right, when you get to a lower time frame too, you're going to see the same thing there. All right. So this is a 30 minutes chart. So as you can see, so as you can see, so bear in mind, one thing you should take note is that a fair value gap on a 4-hour time frame is likely to become what? Liquidity void on a lower time frame. So you should also you should bear this in mind. Whenever you identify a fair value gap on a higher time frame, it becomes liquidity void when you move to a lower time frame. All right.
Yeah.
I hope I'm clear on this.
Yeah. Yes. Yeah.
Yeah. So whenever you are looking for an order block, or whenever you are determined as to whether another block will hold or not, you should be able to look out for these signatures. If it is a bullish order block, you'd like to see sell stops resting above the other block, and then also liquidity voids or a fair value gap resting above the other block. If it is a bearish order block, you would like to see a fair value gap or liquidity void resting below that other block, or a buy stop resting below the other blocks. All right. By seeing these signatures, it tells you that it's going to be a high probability order block.
Nice. Nice.
Yeah,
Thank you
yeah.
for that.
So if does anyone have a question concerning what I have explained? I hope it's clear.
Yeah, for me, yeah, definitely.
Bros.
Thank you. I appreciate it.
Okay, okay, okay. So I mean that is basically that. That is basically that for identifying high probability order blocks. So these are the ways you can use to identify whether an order block will hold or not. All right. Okay. So I mean, just as I said, I mean, it's going to be very short. So I'll end it here. I'll post the recording on the group as well, so that whenever you want to refresh, you just open it and then refresh. All right.
Yeah, sounds good. Thank you.
Okay. So thank you
Appreciate it.
so much for coming. I'll
Thank you, Andrew.
post.
Appreciate
Okay.
it. Take care.
Okay. Okay.
Have a good weekend.
Okay.
Cheers.
Same to you.
Thanks.
Okay.
Bye.
And you don't mind that.
Yeah, all right.
You're becoming a barrier.